vacation place, whatever you could afford. The deferred gratification of the American working class, the fact that they were pinched by their wages not going up, and had now been pinched for enough years that they really had no other way to improve their standard of living, to give their children the American dream that they had promised, and all of that made, as we've talked about this before, made the American working class hungry to raise consumption the only other way they could. They were working more hours than they could tolerate anyway. Their wages were going nowhere. Borrowing was the only thing left. And then, as if God himself had decreed it, just when they wanted to borrow, the government comes in and says, hey, here, for no interest rate virtually, for very low, do it. So they'd been building towards doing it, they'd wanted to do it, they had begun to do it, and now it was made very cheap. Guess what happened? They borrowed like crazy. They just borrowed like crazy. For housing, for land, for build. And we had a boom. It actually started even before the stock market. It didn't start with that. It was already going. But it really took off with these low interest rates. So much so that over the last 5 or 6 years, the American economy was carried by this boom. 4 out of 5 jobs, I've seen estimates of 3 out of 4 and 4 out of 5. 4 out of 5 jobs created in the last 6 years were in one way or another created in relationship to the housing industry. Either built the house, or built the furniture that goes in the house, or service the house, or work in a bank that handles mortgages for that. Somehow, the housing industry, and what we had was, we didn't see it then, we now see it in hindsight, we solved the bursting of the stock market bubble by creating a new bubble. People who were making money didn't go back into the stock market. They'd been burnt. They're not going there. Well, where could they invest? In the new growth sector, real estate. So they invested in companies that made houses. They bought tracts of land. They developed schemes to put everybody in a McMansion, those kind of quickly built things that look like a fancy house and are held together with spit glue and staple guns and all of that. So we created a boom in housing. And here are the 2 things that are the most interesting in terms of the crisis and how it blew up on us. First, the banks loved it because it provided them with a whole new way to make money with all the money, the profits being put in the bank. They could lend it to the mass of people in an explosion of borrowing. Number 1. Number 2, the banks saw so much demand coming from people who could borrow money cheaply and therefore could afford a house. Millions of people who had never dreamed it was possible now were interested in buying a house. Particularly important, parts of the population that had always been renters, had never owned homes. Poor people, African American people, and particularly the new immigrants. Coming to the United States, getting a decent job, and wanting that thing which Americans have when they do well. A house, an apartment that they own, a co-op, a condo, something. So you had this enormous pent-up demand, which never had the money to make that demand effective, but now could borrow cheaply from the government, handing out low-cost loans, basically. So the banks saw a fantastic interest. The banks also began to see a whole new market. And this takes us back to this thing, which I mentioned to you last week, asset-backed securities. This is the last little financial gimmick you need to understand. What the banks did was the following. They wrote mortgages to anybody who wasn't dead. As long as you could sign the form. The form basically says, I promise to pay back such and such many dollars a month to repay the interest and the principal on this loan that you're giving me to buy my home. That's all a mortgage is. They took these mortgages and they bundled them into a group, 100 of them, 200, 1,000, whatever. Then they issued a new security, a new piece of paper, which they sold around the world to people, and they said to them, buy this security, because if you do, it'll give you a piece of those monthly payments that all the people whose mortgages are in this bundle are be paying. So for the next 20 years, you're going to get money, which is your share, depending on how many of these securities you buy, of all these mortgage payments by all these American homeowners, new homeowners. And the banks made a fortune. You know why? Because they would start with $1 million. They'd lend it to a bunch of people. Then they'd take these mortgages, these people, and they'd sell them as securities, in bundle as security. They get the money back, and they could lend it again. And they were making a fortune off of this. And it became a very interesting phenomena because all around the world, this became, because America's the leader after all the last 30 years, we're the growth area, all of this is happening here. Wealth around the world bought these securities. Governments, rich people, corporations, banks, insurance companies, everywhere invested in these things. They invested because the banks here did a brilliant job. First they got them rated AAA, or very highly rated. They went to Fitch and Moody's and Standard & Poor's, who did an investigation and said, great, there ain't no risk here. Then often they hooked them up with an asset default swap, so that even if the guy ever defaulted, you'd be covered by this insurance policy. Perfect deal. You marketed it to the whole world, which became, therefore, a customer for these securities and a trader in credit default swap. You drew the whole world of finance. All the savings of all the countries of the world became focused on the American market. We had the product that everybody else wanted to invest in. Think of it this way. If you're in the middle of Myanmar in Asia, you have some money, you're a rich person, you're a bank, you're a company, or whatever. You can lend to a local Myanmar industry, but it's risky. That's a country with a lot of problems. It's got these kinds of risks, political risks, currency risk. Or you could lend to something in the United States paying you almost the same, AAA rated with an insurance policy from the biggest insurance company. It's a better investment. Sure, if you're very patriotic and you want to help Myanmar because you're a Myanmar patriot, okay, no, there are people like that. But if what you're concerned about is having a secure future or paying for your kids' education or having money that you can fall back on, then you can't afford this patriotism, and you go, and all over the world, huge amounts of money come into this and it helps the United States. It creates jobs here. The most famous job, the one I love best, is the job mortgage broker. Something like 500,000 Americans in a period of 5 years became mortgage brokers. A job that had been very unimportant and small as a profession before that. What is a mortgage broker? Just what you think. The job of the mortgage broker is to bring together the person who wants a mortgage, wants to buy a home, with the lender, usually a local bank. So think of some man or woman in their car riding around trying to scrounge up people that you can get into your back seat, drive to the local bank, sit them in that office, with the friendly banker with the plastic flowers, and discuss how they could be better off with taking a mortgage. And the easy way to do that is to say, what are you paying interest? $700 a month. Here, for $600 a month, I'll put you in your own house with your own yard. Here, I'll get in the car, we'll drive over there, I'll show you. Look at that. Do you want to stay in that crappy place you have with $700, which is money out the window, you'll never see it, it's paid to your landlord? Or, for only $600, I'll put you in your own house. Not only is it nicer, but you're paying your own, building up, your own equity. Sorry. And the mortgage brokers got paid as follows. Basically, $500 a mortgage. Every person you bring in here signing that they're not dead, they can sign this piece of paper, bing, $500, go get the next one. Why? Because the bank simply turned around, bundled them, and sold them to somebody in China or somebody God knows where, got the money back, and did it all again. Was this broker therefore supposed to tell the poor little Jones family what the conditions of this mortgage were? Of course not. He had or she had every incentive to fool them, to cajole them, because his income, the broker's income, depends on having them sign that document. So he will say, see, it's only $600. He will not explain to them that it's $600 the first 2 years. Then it goes up or it's a balloon. They developed all kinds of new instruments. A balloon mortgage. The payments at the first 5 years are low, then the payments make it up later on. That's why you're having a problem now. All kinds of people thought they had a mortgage paying X dollars a month and are now getting a letter every month. Now we have millions of Americans get letters from a bank saying, well, your 2-year grace period or your 3-year introductory rate is now over, and now it goes to the market rate. So instead of paying us $800 a month, as of next month, it's $1,340. And there's no way on earth this family can do it. So the house is lost. They have to leave. And all the money they've paid up until that point is lost. The bank takes the house, all that disaster that we hear sometimes about. Anyway, it worked for 6 years. For 5 or 6 years, it sufficed to keep us from the great meltdown. But the problem was, it was another bubble. And when the brokers inveigled millions of Americans who couldn't possibly maintain the payments, given what they actually were doing, signing, when that began to happen, it was just like the stock market. Suddenly, the bloom was off the rose. Suddenly, the charade was over. And then began a race for the exits. Sell these instruments. Get rid. That's when you hear toxic asset. That's one of these securities backed by mortgages where no one's ever going to pay that mortgage. So that security isn't worth anything. But the bank has it sitting there in its vault, and it's got a worthless thing, and it doesn't know what to do. It all fell apart. And what we'll leave with for you today, and we'll pick up with on Monday, is that there's no other bubble now. There's no place to go. There's nothing to salvage. So we're having now what we avoided in 2000, the wealth effect, as people cut back, thereby collapsing more industries, who have to lay off more people, who cannot maintain their mortgage payments, who therefore foreclose the house, which destroys the neighborhoods, which makes businesses go out of business, which means more workers. And we're in that spiral that capitalism gets into periodically, only this one, as you'll see when we resume